As per the old saying, we have to start saving as soon as we start earning because saving could be beneficial. But will savings be sufficient enough to meet our future financial needs? The answer to this is no, because savings can only help you sustain, but to attain your future financial needs, you need to get better returns than savings. So that we need to start investment. But investment contains risk, and this what stops most people from starting their investment. Now, we have our investment expert Mr. Gurraj with us who will help us understand why investment is beneficial despite of having risk involved in it. Gurraj, the stage is all yours.
What is the difference between savings and investment? Many of us might be saving, but are you investing is also equally important. People will say, I don't want to take risk with equity because it gives me negative return. But you have to be clear when and where to take risk. You can't say I cannot take risk, right? Because if you don't take risk, then inflation is the biggest risk for your savings. That's where don't think that some assured return products are being given. So you will say that, array, I'm getting this assured return. So why should I look at some product which doesn't guarantee any return? These thoughts will keep coming when you're actually looking at various products, right? So one thing which you have to be very clear is all these savings will give you assured return, but that amount will be constant throughout. And when you add inflation, absolutely the value goes down as time goes by. So that's where I always say savings is good, but savings has to be invested. If you are only going to be in savings, because you are going to take a bigger risk, which is the inflation risk. When it comes to investment, always understand there is going to be risk, right? Without risk, we don't call it as investment. So the risk can be loss of capital or it can be not getting the return expected. Now, somebody might ask or have this question in mind, but how do I understand risk in my investments? I will say there is very simple way because people come and ask me this question. There is a state government bond which is giving 9.5%. It could be any state government for that matter. It could be for some power projects or some hydro projects. They may give some name and launch a bond. Right? They might be offering 9.5%. The first thought which comes to people's mind is, array, it is state government bonds, so where is the risk? So this is where we make a mistake. State government bond doesn't mean that it is risk free. How do I understand there is risk in any investment? Looking at the coupon itself, I can understand. Right? For example, if the state government is saying we'll give you 9.5%, right? My basic logical question would be, boss, when SBI is giving for its FD 6.5%, how is that this government is giving me 9.5%? Right? The second logical question is, if the state government was able to raise money at a cheaper interest rate, will they offer me this interest rate? Right? The very fact that they are not able to raise loan at a cheaper rate is what is forcing them to offer you 9.5, which means there is risk. See, imagine a state government can approach the banks and ask for money. Now the banks are also not giving. That's why they are coming to the public and saying at 9.5, because banks might ask them more. Just to make it more simple, it is something like this. I go to HDFC for a housing loan, right? They check all my credentials and then they say, sorry, boss, we can't give you housing loan because you are not meeting our requirements. I need housing loan. Now what I do? I go to some other cooperative bank or NBFC. He's too happy. He says, no, no, don't worry. Anyway, I'm pledging your house. No, I'll give you loan. But now see the difference. What is happening is, if HDFC has given me a loan, I would have probably paid 8.3 or 8.4, right? But since HDFC is not paying me or not giving me the loan, now I'm forced to go to somebody else. And in the process, I give a higher interest rate, right? This is exactly how the market will work. So the moment you see a higher coupon, you should be very cautious. There is risk. Absolutely. I mean, that's the way we need to understand. Don't go for that reason, oh, this is assured 9.5 for 5 years he is giving me. Because many corporate bonds will come. People will say triple A rated, double A rated, single A rated, whatever it is, right? For me, the answer is I will not even look at written. I will look at the coupon and decide, yes, boss, here it is. This is risky. Otherwise, he will not give me such high interest. So, do I want it? The answer is yes or no, depending upon whether you want to take risk or not. Right. So, this is one way of easily understanding whether there is risk in your investment or not. Right. So, that's where I will say, ki, please look at all these products where they are giving you higher coupon. There is risk. Risk could be anything. It could be not getting back your capital. In fact, when I was traveling, I was really shocked. When I will not quote the state government, but one of the state government has not paid the PF money of the school teachers who have retired last year. Imagine this is a scene with some of the state governments. Now think about your and my money being deposited there, right? PF is supposed to be refunded, right? So what I'm saying is, I'm just cautioning you. It could be state government, it could be any corporate, it could be XYZ, whoever it is, right? For me, I need to be very clear when I'm investing because what is the risk in this? So how do I understand risk? One is looking at the coupon itself, I can understand. But if it is a equity, then obviously we know the prices will keep fluctuating. So that risk is always there. So it all depends on how the company does it. Yeah. So the one message I want to leave from this slide is when you talk of investments, risk is coming along with it. So you need to understand what is the risk you are getting into when you are investing. So that's where we always say, please diversify in your investment. Don't put all your money in one place.
Thanks for your detailed answer. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.